All right, let me see here. Let's get this thing started. What's going on, everybody? Can you guys hear my voice and see my screen? Let me know. I'm experimenting here directly live streaming from Zoom right to YouTube. So I'm just trying to figure this out, so bear with me. If you guys could do me a favor and hit that thumbs up, make sure that more people know exactly what we're doing in the Alpha Trades community. And also write down some questions that you have in the chat so I can check it out and do some analysis. Okay. So let me see here. So I'll get started in about, let me see. All right. Can everyone see me? Let me know in the chat below if you guys could see my screen and hear me fine. All right. So first things first, I actually wanted to start out with the 1 hour chart. And again, if you are not familiar with the Advantage community, we were previously known as Cryptosomniac. We have since rebranded to Alpha Trades right here, as you can see. Our community is specifically focused now on crypto as well as equities and Forex. We do a lot of analysis in the equity space right here, as well as the FX space. And then we also take some options within the equities positions. So a lot of our members actually like, the options, calls, or puts that we have. But specifically regarding Bitcoin, this is probably the biggest product of our community, which is, people love crypto. I think Bitcoin is by far one of the most innovative and unique assets that has ever been created. And, the fact of the matter is, I think Bitcoin is still uniquely positioned in a way where I think over the next several months, we're going to see something that I don't think a lot of people are really prepared for, which is, I'm personally still thinking that we're going to have a pretty deep drawdown in price action. But let me sort of dial back a little bit and let's focus on the local price action first, right? So the one thing that we see on the local price action is that I was seeing this head and shoulders pattern being created right here. Okay. Here's that left shoulder right over here. Here's that head. And here's the right shoulder being created, right? And if you look on the 4 hour chart, okay, I think it was evident with volume. Remember, when it comes to head and shoulders patterns, okay, the volume actually must go along and match what the pattern itself is dictating. So if you guys are not familiar with how these patterns work, go to something called the pattern site, okay? This is Thomas Bulkowski's website where he has noted down the success rate of patterns, volume regarding specific patterns, when they should break out in terms of, the depth of the pattern itself. All that information is actually on this particular website. So for example, if we just look up head and shoulders, let me see here. Complex head and shoulders, here we go. Head and shoulders tops. Well, let's do head and shoulders tops right there, okay? So here's the thing about head and shoulders tops, all right? The one thing that you need to know about this particular pattern is that on the left shoulder, the volume must be higher right here, and the head must make a higher high. So this is like your volume divergence, we call it, okay? Volume divergence is something like this, for example, all right? Price over here hit a high of 94.81, yet price again put in a higher high on a lesser volume. See how this key high volume right here was pretty high right here? But then over here, we hit a 10,000 high, yet it was lower volume. This is what we call a volume divergence. All right. So in the same case, this is why head and shoulders patterns are denoted in the same manner. You create this big complex, top pattern, which is known as the left shoulder, head, and right shoulder. So the head and shoulders pattern. All right. And in that, the left shoulder has higher volume, as you can see right there. The head right here puts in a slight higher high, as you can see, because the high over here was 99.70. The high on the head was about 99.79. Nonetheless, it's still a higher high, right? But look at the volume down here, right? In this area, lesser volume, but a higher high. And then what happens? Left shoulder, head starts breaking down, right shoulder starts breaking down. But now it looks like, we seem to be in this falling wedge pattern, okay? Falling wedges, again, they are typically bullish if confirmed, okay? So what we're really doing is we are creating this bearish pattern, which is, a multi-day, actually multi-week pattern. And this is actually, also technically now creating a falling wedge pattern. But both these patterns were actually inside a larger pattern, which was a bigger symmetrical triangle, which was, if you guys have seen my previous videos, was a potential ABCDE pattern. Again, with these triangles, if you're not familiar with triangles, right, and if you're not familiar with Elliott waves, if this is the top of the fifth wave right here, this would be your A right here. You could make this your B. Technically, this would be your B. This would be your C. This could have been your D. This could have been your E. And then we'd have actually a pretty decent sized breakout to the upside if it was confirmed that this was the ABCDE. But that did not happen. All right. I was actually looking at this pattern and I'd been short for I think 2 weeks or so from back here. And this is actually available in the Advantage community, right? We've been shorting from, where was it? Like May 12th or May 13th or something. So as you can see, May 13th, this is where we entered our short position, okay? I even stated right here, after careful assessment of the equity markets and now noticing BTC is inching up, all in all, I was summarizing that this was where I was talking about being more net short on Bitcoin when price, again, you can see this timestamp, when price is moving up, inching up through this 9,000 level. Again, that was way the heck over here. Okay, so I'm not just someone who jumped on the bandwagon of being a bear once Bitcoin broke through, broke below 10, broke below 9. I've been shorting all the way up on this move because I did not buy this garbage up here, okay? For all the beginner traders who think that, just because Bitcoin gets past 9,000 or gets towards 10,000, they just think that spontaneously, volume is going to come out of nowhere. They think that, retail traders are going to drive up the market. But in our community, what we look at is deep volume analysis, deep, technical analysis with price action, as well as what we were looking at was OBV right here. If you're not familiar with OBV, this is on balance volume. All right. This means that how much of inflows are actually coming into this particular asset being BTC, and is it actually moving the price up? Well, in this particular case right here, the OBV, as you can see, when we created this high, 94.81, okay, so the OBV was about, what was it? I think total contracts exchanged was about 9 billion. That doesn't make any sense. I think it's closer to million. I don't know why they have billions right here. But anyway, so point is OBV right here was, let's just say 9 million, right? Price gets from 94.81, gets up to 10,000, but look at how much OBV moved. Barely. It barely moved. Yet over here, price was going down, but then OBV was going up. Why is that? Well, that means that retail, okay, is thinking that we're going to push up higher, but what's probably happening is more and more people are, professionals specifically, are unloading their positions over here, all right, or shorting, and then boom, you see a big collapse and then a big drop in OBV, okay? Again, price climbs back up, all right? OBV creates a lower high right here, all right? Again, big drop, but then volume again right here, pretty sizable at the tops. This is the one thing that I've been noting in my videos over and over again, which was that volume at these highs right here, for the most part, was saying that there are a lot of professionals dumping on retail. Okay, as retail FOMO'd in at the tops, professionals dumped. FOMO'd right here, professionals dumped. Even FOMO'd right here, professionals dumped. This is, again, visible via OBV, visible via the volume, the RSI even right here, which shows momentum, right? So again, price had created a higher high right there. The RSI momentum oscillator created a lower high. That was your bearish divergence. So there were all these signs that were already telling us that we were bearish, okay? It's just that when is that breakdown going to happen? Unfortunately, I had to suffer through my, my short bleeding up here because I was net short on, I think my average was like 93.50 or something. Let me check it out over here. Looks like I think at some point I had a 93.22 average on my short position. As you can see, I was negative 13% down on the whole, but I held through it because my technicals stated that this to me did not look like a pattern that looked like we were going to have a continuation to the upside. It looked like a pattern that was eventually going to break down. I may have been just a little bit early on it, but eventually we finally got the breakdown, right? We're now at closer to $8,900. So where to from here, right? That's the real question. So let's look at the 2-hour chart. I think this is the chart that actually helps you identify, some key levels in SR, right? SR meaning support and resistance, okay? If we look at the SR levels, coming from this key area, now you're probably wondering, well, why that key area? Well, this was the last bit of consolidation before we had that big push up to 10,085. So if we pick this area as a key resistance marker, you could see I was resistance right there, smashed up through it, used it as support, took off, broke back down below again, and then resistance, again, broke up all the way through it, came back to test as support. So point is, that whole area, which is 89.49, is a key marker to watch when you look at things to the left and right of the chart, okay? So fact of the matter is, this is the marker that you want to be watching right now, okay? 89.49 should be the marker that should be holding price down. Typically, it's not, an exact marker, so I don't want to tell you like, all right, to the dollar, this is going to be it. That's not the case. It's usually like, up $25 or $50 here and there, okay? But so far, what you can see is on the 2-hour time frame, we had a bullish candle right here, pushed up towards 89.49 right there, rejected, fallen candle, big, not a bearish engulfing, but a bearish candle nonetheless. And now we want to see follow through to the downside, okay? If this falling wedge right here starts breaking down, you guys better be prepared because this is going to be a very fast and deep slide, all right? It's going to probably be accelerated kind of like this one right here, okay? So just like this 30-minute, okay, if we go back over here, all right, if you guys remember this, when we put in that 10,085 high, we were actually creating somewhat of a falling wedge right here, right? You could see, first touch, second touch, third touch, fourth touch, and then boom, right? Broke right down through it. The same thing is what we're doing right now in terms of the 2-hour chart. Falling wedge, but unconfirmed. What is confirmed is that this larger triangle pattern did not confirm to the upside. That means the continuation of this larger trend is broken. Even this $7,600 to $7,900 consolidation triangle that you see right here, if we took that as a first touch of a trend line, took this right here as a second touch, took this as a third touch, even that trend line momentum got broken. Remember what I do typically, if you guys have been watching my videos for a while, there are a few things that you'll know about me, okay? I don't use too many indicators, number one. Number two is I always try to identify horizontal support and resistance levels. That is by far the most important thing that you want to learn about technicals. Number three, identify ranges. Where does price move in ranges? Whether it's this key high or this key low, identify that range, okay? Then on top of that, then you can start identifying patterns, okay? Like this falling wedge, head and shoulders, the ABCDE triangle that I was showing you. Then you could start building off an idea of, okay, well, the 1 hour time frame looks like it's showing a falling wedge. It's showing that, we're not able to get through this key resistance or support level, blah, blah, blah. And then you start developing a thesis for your position, okay? Until you build the case for why you should enter your position on a multi-time frame basis, on the basis of volume analysis, raw price action analysis, range analysis, you should not be getting into a position. And so the reason why we got into a position is because the market overwhelmingly was screaming that it was overbought. The volume did not support price action up here. It really just seemed to me that all of retail, due to that whole, BTC having hype, was just thinking that we're just going to be perpetually long and we're just going to blast up through here. The one thing that we pay attention to in our community is how things are doing in the equity markets as well. Okay, so in the equity side right here, Faisal, who's our equities analyst, he puts out daily updates every single day of how the markets are doing. And this is available to our Advantage members every single day. So understanding what's happening in the Advantage side and the equity side helps you identify what's happening in the Bitcoin side or the crypto side. All right. So fact of the matter is, I think, BTC had already been signaling, we are heavily overbought. This is somewhat of a top. Doesn't mean that we have to go down to the 3 or 2000 levels or whatever, but that is one thesis that I've been building, why I personally think that we're going to go towards those levels, that 3000 and 2000 level. Okay. And I'll explain that in a second. But for now, what you need to understand is we broke down from this ascending trend line right here. We have this head and shoulders pattern right here. Okay. So there's a couple of different ways to measure the downside move. So let's just say, let's build the bullish and bearish case. All right. So let's just say this falling wedge right here confirms to the upside, right? So what is the target? So based on a measured move, and this is how you measure moves when it comes to patterns, you take the first touch, the highest touch in the pattern itself, to the lowest touch right there. All right. Or rather the broadest, movement in that pattern. And you say, okay, well, if we're going to break out, let's just say today, right? So from this area right here, the measured move to the upside should be $10,120. That's if this falling wedge confirms. That would be typically the measured move to the upside. All right. But let's just say, the head and shoulders pattern confirms, right? So what would be the measured move for that? Well, from this head high right here to the neckline right there, we just say, all right, well, maybe today or tomorrow we're going to start breaking down from here. Let's move this to the right. That brings our measured move to about 75.25. And then what about this triangle, which we actually broke out of right there, right? Again, same thing. All right, from this high right here to this low, the measured move from here down, because remember, we broke out of the triangle yesterday, from here down, that target becomes about 69.75. So the measured move is from this triangle down, 69.75. The head and shoulders measured move is 75.25. The falling wedge target to the upside is 10,130. Okay. Now, here's the thing, okay? I've been building this big sort of thesis about why I still believe Bitcoin is actually going to see more downside. And let me show you guys exactly why. Okay, so here's a daily chart of Bitcoin. One of the reasons why I want to say for now, at least we'll see more downside is because of this simple pattern right here, what we're seeing. If you look at this fractal compared to what happened in January and February, you can see we made this nice, climb. We call this a staircase climb, right? You take the stairs up kind of like this, but then you typically take the elevator down or you jump out the window. It's just a saying that we have in the markets. Same thing right here, right? You kind of just, moved up and down, a little bit consolidation, moved up and down. Not a whole lot of consolidation, but nonetheless, bit of a consolidation. But again, you topped off right here, in terms of breaking this ascending trend line, and now you're breaking outside the trend line. So if this movement right here is any bit of what's going to happen over here, we should be seeing a violent movement to the downside over the next month. All right, so today is May 25th. So by the time next month rolls around this particular date, June 25th, we should be seeing more violent move to the downside. Now, again, could I be wrong? Of course I could be wrong, right? Anything could freaking happen in the market. Me drawing a bunch of lines doesn't mean shit, okay? But here's the thing, all right? I want to show this to you guys in a couple different ways. On the 5-day chart, all right, if we look at this shift pitchfork, all right, one thing you need to understand about shift pitchfork is it's basically a complicated way of understanding a range from key highs that have been set and key lows that have been set, and then those defining a range, which is the pitchfork itself. All right, people try to make shift pitchforks complicated and they think it's like a work of art or something. It's fucking nothing. It's just Fibonacci levels in a larger pitchfork. All right, so try to call people out on their BS when they start drawing pitchforks and they start thinking that this is going to predict the future, because it's not. They're nothing but Fibonacci levels. Each one of these is a Fibonacci level. It's just drawn in an arc like this because what it's doing is it's taking it from the 20K high that we had to the 3.1K low and it's drawing basically a range of Fibonacci's, okay? But the important thing about the range of Fibonacci's is that if you look over here, 10,584 was the high for October 2019 when we had that big short squeeze with the Xi Jinping news, the China news, whatever, that they were talking about, well, blockchain is great and Bitcoin's great. But then what happened? The news fizzled away, didn't do shit. Price of Bitcoin retraced completely, right? Again, price moved back up, okay, all the way into February 2019, again, hit a high of 10,550. So technically, as per this key high right here, we hit a lower high, okay? By definition, that is a lower high. If this high was even a penny above this, it would be a higher high. But by definition, this is a lower high. So we have a high right here. Well, technically, even this is a lower high because that comes from, this key high right here, 20K all-time high, 13.9K lower high, 10.5K lower high. But what we're really paying attention to is this 10.5K marker. All right, 10.5K high, again, 10,584, 10,550 to be specific. And then over here, just about 2 weeks ago, we hit a high of 10,085.5, right? So lower high, lower high, lower high. This lower high is particularly important. Now I'm going to tell you why, okay? So look, we hit this 10,550 high or 584 high, went down to about 64.10, moved back up towards 10,550, and then had a big move to the downside to the $3,600 level, right? And you're probably thinking, well, that was because of Corona, and you can't really count that. It doesn't matter. If a market is truly supposed to be efficient and there are really enough buyers who believe in this asset, they would have stopped it right there, or they would have stopped it right there. Buyers should have stepped up, but they didn't, right? Buyers had to dig in, all the way down here at $3,600 for liquidity. So that means that Bitcoin was aggressively weak from 8,000 all the way to $3,600. And yet from 3,600, all we can muster up is a mere $10,000 move. I mean, I think that's pathetic, right? Again, this is not me hating on Bitcoin. This is just me saying that after you dug into all this liquidity down here, and the reason I draw this box is because this was the key low right here before we went all the way to 10,550, right? So below that, this box is all untapped liquidity. Untapped liquidity only took us to $10,000 flat. That's ridiculous, right? So why am I mentioning this to you? Well, if we only reached up to 10,000 while going all the way to $3,600 way down here, that means on the next move down, we probably have to put in a lower low as per this $3,600 low to be able to at some point break through this 10,500 area. And again, that's not even a guarantee. That's just me assuming that at some point, the Bitcoin bulls, once they flush out a lot of participants out of the market, maybe, just maybe, if they garner enough momentum, below 3,600, below 3,100 low, from December 2018, maybe they could push up through this. But until then, if we put in this lower high right here and Bitcoin bulls don't step it up and smash through this sometime soon, chances are we're probably going to head lower. Okay. People think that we're going to stop at, 6,000 or 5,000. I don't see why. Why would we do that? Why would we stop there? We went to 3,600 and we couldn't break up through 10,000. I think the bulls are in a lot of trouble, and I think they know that. And one of the reasons why I think, the bulls are kind of in denial, and this is my other point, is that they are not recognizing the fears of the environment around them, whether it's coronavirus, whether it's the overall economic instability that we're seeing, not only in America, but also the rest of the world. People are looking at their finances, they're looking at their bank accounts, they're looking at job prospects for the next 12 months. Consumer sentiment is at, cratering levels. Bitcoin bulls are not really there to step it up, and drive up the prices in terms of FOMO, because the FOMO that we had in 2017 is not the same kind of environment that we can sort of, have right now. We are actually in a more dire environment now than we've ever been over the last 9 or 10 years. Aside from the great financial recession or depression that we had in 2008, 2009, this is probably on par with that, what we're seeing with coronavirus, if not worse. So that means that if we mustered up our strength to get to 10,000, we got rejected there. And remember, we barely even spent a day above 10,000, folks. It was a wick and then pushed back down, right? So if we can't get back above 10,000 or smash up through 10,500 soon, that means the bears are probably going to get in control, and we're going to start forcing this price down even further. And one of the ways that I look at price action is if you just simply turn on this indicator right here, it's called the pivots indicator. All right. You could just simply go on the weekly chart and look at the weekly pivot right now. The weekly pivot right now is around $8,100. So there's a chance that you could bounce off 8,100 and then maybe push up higher. But again, if we break down through the pivot of 8,100, I don't see any strong support just based on this pivots indicator all the way to the S1. And guess where the S1 is? It's right around $2,400. Okay. So my guess by the end of this year is Bitcoin will be somewhere between $2,400 and $1,500. And I'll tell you guys exactly why 1,500. It's based on this right here. Let me see here. Let's go to the 5-day chart. Maybe it's this chart over here. Let's see. I got so many charts. Let me turn off this pivot indicator right here. All right. So let me see here. So if you look at this key high, where was it? This key high right here in November 2013. All right. So, for those of you who understand technical analysis, right, you understand that, support levels get flipped into resistance and resistance levels get flipped into support. Doesn't always have to happen, but it, happens quite a bit, right? Well, guess where the high is in November 2013? It's 1177. So let's just say $1,200, right? We have yet to retest that area as support. Resistance right there, resistance right there. We haven't tested that area of support, right? I'm sure you guys have heard the saying, we should wait for the retest, the retest of support turning into resistance or resistance turning into support. And then that could be your potential buying opportunity. Well, I don't see why this can't bleed down here to $1,200 or so and then potentially push up. Again, I know these prices are pretty wild and far off, but the way I'm looking at the market right now, when it comes to this big descending parallel channel, which you could make the argument is a massive, bull flag right here, right? This could be the pull right here. This could be the flag right here. But again, from this flag, we had an all-time high right there at 20K, lower high, lower high, lower high, and another potential lower high. And we had from this low right here that was put in 3,100, we had a higher low, but again, a lower low. So that means if we put in another lower low, it's very possible that we at least get towards that $2,400 target that I told you all about, which is again around the weekly pivot or weekly S1, or this $1,200 target for Bitcoin, which is from the November 2013 high. Okay, don't knock on the idea until you watch my analysis, read my videos, or I'm sorry, watch my analysis, read my analysis on TradingView or Medium for all the reasons why I've stated why I still believe Bitcoin could go lower, but still be bullish. Okay, it could still be bullish even if it comes down to these price level. This is the one thing that people don't understand is just because Bitcoin goes down to those levels, they think, all right, well, it's over for Bitcoin and miners are going to suffer. No, the Bitcoin hash rate itself, it reflects the difficulty with what's happening in the mining world. So that means that the miner difficulty is actually going to go down. So it's not going to be impossible for miners to mine down here, even if the prices are significantly lower. All right. When it comes to their electricity costs and stuff, that might be some trouble. And this is where this final nail in the coffin comes in, where this might be the final capitulation for Bitcoin, which again, capitulation doesn't mean we're going to die. Bitcoin's going to die or anything. That's not the case. If you look at this article from Charles Edwards, it's called Bitcoin's Production Cost. He has this very unique indicator, okay? And you can put this on the daily right here, and you can turn this on, and it's called Bitcoin Production Cost, okay? It's on TradingView available. And so guess what the average production cost for most miners is right now? It's in this area right here, in this red box, okay? So that's anywhere between, currently around, well, actually, I think it's up here around 12,000 all the way to about $15,800, okay? This is the average cost, total production cost of mining. And what does the production cost entail? Well, it entails all these things: electricity costs, hardware capital expenditures, bandwidth, wages, rent, insurance, right? All these things are factored into this indicator of the energy costs, or rather the production costs of mining Bitcoin. So if the price of mining a Bitcoin is lower than the total production cost, what is going to happen? Well, the miners are probably going to want to sell more Bitcoin to recover some of their costs that they're incurring due to the production of Bitcoin. But let's just say the miners are resilient. They're thinking that, all right, well, we can hold off on maybe a month, 2 months, 3 months. But after that, at some point, they can't just keep mining at a loss, right? They're going to have to pay electricity costs. They're going to have to pay rent. They're going to maybe buy new equipment. They're going to maybe buy, bandwidth, or have to pay wages. All these expenses start piling up. This is where things get interesting. Guess what we just had on May 11th? Bitcoin halving, right? Halving cut down Bitcoin rewards from 12.5 BTC to 6.25 BTC. So that means miners are even making less than they were pre-halving. For what? Now the costs are the same, right? The costs are the same, but now you're making less money to mine Bitcoin. So what happens to these miners? Well, the inefficient miners, or rather the miners who are not making as much money right now in terms of profit, right? They're going to have to start shutting down their rigs, or they're going to have to start selling more Bitcoin to be able to keep up with the cost of production costs for Bitcoin, for mining Bitcoin, right? So this is where the conundrum is, where miners are probably going to be selling. Bitcoin costs are not appreciating. A lot of people, probably bought somewhere up here near the top. And if prices start going down, just like we had in the coronavirus scare, there might be another liquidity crisis, just like we had over here. And remember, liquidity crisis, this was what happened during the liquidity crisis of coronavirus. And liquidity crisis is a simple term for saying that everyone was liquidating anything and everything that they could get their hands on to raise cash, to raise capital, because clients are probably calling Grayscale Investment Trust. They're probably calling bigger hedge funds and saying that, hey, I don't give a shit what happens, what price Bitcoin's at. Just sell it. I need the money. I'm scared of this coronavirus thing. I think the market is going to go down. And this is why you see this big drop in price, okay? Because everyone is selling and they're trying to get the best bid possible. But if everyone is selling and there's not enough buyers, what happens? you get a big red massive candle like this. This is where you see true capitulation coming in. Again, this doesn't mean that we can't have another event like that, but maybe a little bit more drawn out over here. And that would be due to the miners selling. That would be due to people who think that, all right, well, I think Bitcoin's going to go down. It can't break through 10,000. You know, I need to take profits right now while I can before Bitcoin goes down. All these things start piling into the price of Bitcoin in terms of the sell side. And then you see another drop coming in. And while people keep thinking that buy the dip, these people are going to be left holding the bag for a long time. Okay, so this is my larger thesis of Bitcoin, why I still do believe that Bitcoin can still go lower towards $2,400, maybe even $1,200 or $1,300, but yet still be bullish, in the longer term. All right, people probably think that, I'm just an ultra bear, but to be honest, there were times where I longed through the cycle, but there were also times where I believe that this cycle right here was complete BS. Okay, the driving of this cycle to the upside was probably due to oversold conditions because the market itself was ripe in shorts being liquidated to the upside. But then at some point, remember, prices have to come back to reality. They have to come back to how much interest is there in the real spot market. And if spot markets are not reflecting that there's real buyers coming in and buying this Bitcoin, well, what's going to happen? Prices of Bitcoin are going to slide, right? So I believe that we are actually on that footing right now, which is we're actually seeing the slide of Bitcoin while a lot of people are still in denial. Okay. And that's great because as someone who's a bear and someone who's shorting, you don't want to be aggressively shorting while the entire world is shorting. Okay. Because either your funding rates are going to be high, either, price might reverse on you quickly and stop you out, whether it's going through, massive short squeeze or whatever. This is great. This is the perfect time to be short because everyone I know, in the Twitter sphere or wherever, all these quote unquote analysts, everyone I know is actually net long on their positions. All right. Here's another indicator where I can show you how I know that more and more people are actually long. Okay. Let me see here. All right. Where the heck is my indicator? So this indicator right here, folks, is the Bitcoin COT report. COT stands for Commitment of Traders Report. This is derived from the CME data. Okay, so Chicago Mercantile Exchange, which does the Bitcoin futures trading, right? What they're showing is that open interest, okay, was actually going up in this particular cycle, as you can see right here. But then price actually started coming down, but open interest actually kept climbing. And then you're looking at these other things and you're probably wondering, what the heck are these? Well, non-reportables are your average, retail investor, but they have a bit more money because to operate on the CME exchange, you have to have, decent amount of margin. But then on the non-commercial side, this is your hedge funds and your institutions. These people are actually increasing their short exposure, meaning these people are actually going more net short while the average person is actually more net long, just like more and more retailers are net long right here. So what exactly is happening? Well, I personally think that the more professional traders are actually shorting the market or selling, and the average retailer, which is just you and me, technically, I'm a retailer too, right? Most of your average friends or people you see on Twitter are still talking about 10,000 or 12,000 prices, and those people are net long. Who do I follow? I'm gonna follow the smarter money. Okay, I'm gonna follow the bigger whales, the bigger players in the market. So those people being net short makes me want to be short. All right, and so that's why I'm still net short. I still do believe that Bitcoin will probably make potentially another low, maybe today, maybe tomorrow. I don't really know when it's going to happen, but again, like I said, keep an eye on this 89.49 level. If we break out of this falling wedge, like I said, we could have a target to the upside towards 10,100. But again, we still have a good amount of resistance on the way up. So I don't think it's going to be a breeze just on the way up. Remember these falling wedges, these head and shoulders patterns, these triangle patterns with their measured moves. they don't necessarily mean we have to go to those measured move targets. They just mean that it's a general outlook of how these patterns are going to play out. Okay. It's not always a necessity that the measured move targets have to hit. All right. But again, I am still bearish. I am still short on Bitcoin. I still do believe that we're probably going to hit low 8,000s or possibly even, high 7,000 at the very least. Okay. But if 8,100 breaks on a weekly level, we're probably going to go much, much lower. All right. Much, much lower than most people anticipate. But again, I'm going to take it one level at a time. I showed you guys both the bullish and the bearish cases. I could be totally wrong if we start blasting up through here today, tomorrow, by the end of this week. But, it just doesn't seem like that's the case right now. On a monthly time frame, here's another thing, right? People think that, oh, we had such a big bullish engulfing candle right here. Why are you still, bearish? That's bullshit, right? This doesn't mean anything. For a bullish engulfing to be valid, you need follow through to the upside. Look at the way this candle looks right now. We got 5 or 6 more days in this monthly candle right here. If this looks any worse, by tomorrow or by, monthly closing, that's probably going to mean that there might be a potential reversal to the downside. All right, so this bullish engulfing right here, which again, technically isn't really a bullish engulfing because you got to engulf the entire candle because this downside wick right here should be engulfed too. But again, I'll give it a bullish engulfing because it engulfs the body. Okay. So with this bullish engulfing right here, right? Check this out. Okay. All right. So we had a big bullish candle right here, right? All right. So let's do that. We had these two candles right here. Okay. Closed and opened right around that area. Had big downside, big bullish engulfing right there, pushed up through it. But again, look at the following month in February. Pushed up all the way to a high of 10,550, closed at 8,531. So almost a $2,000 drop, right? So this is what I mean. Anything can happen by the end of the month, folks. All right. So we got to clean up this monthly candle if we're actually going to be bullish to the upside. And if we're not, this monthly candle is going to be looking a lot more ugly by the end of this month in 6 days. All right. And that means June is going to be a hell of a month. And that means that my targets for June are going to be much lower, at least towards, 7,000 or 6,900. And if those break, man, Bitcoin is going to be in serious trouble to the downside because remember, miners are already selling at a loss, right? And here's another thing that I took away from this article. 2019 has been the worst year for Bitcoin miners in all of the last 5 years. All right, this article was written on December 13th, okay? So already 2019 was not really the greatest year in terms of revenue or profitability for miners. 2020 so far has been all right, but still not the greatest, okay? I'm sure a lot of miners probably capitulated right here, sold, and a lot of miners are still mining at a loss right now. So it's going to be very, very interesting when it comes to Bitcoin. And I know this kind of honesty or brutal honesty might be hard for a lot of people to swallow, but here's the thing, okay? You don't see that many people talking about the realism behind Bitcoin and its true bearish nature with the way it looks right now, because I think everyone is too invested in thinking that Bitcoin has to succeed from here on. Like they think that the success of Bitcoin is only tied to how high the price can go right now. They don't think for the long 5 to 10 year time horizon. And this is why most of these junkies need to be weeded out of the market, because these are not the real players who actually believe in Bitcoin. They're just here for a quick buck, and a lot of them will disappear. All right. So once they get weeded out of the market, maybe around 3,000 again, or 2,000 or 1,000, wherever Bitcoin goes, right? You'll probably never hear from these people again, right? Maybe you might hear from them 5, 10 years from now when Bitcoin climbs back towards 10,000 or 20,000. But once price goes down another, $5,000, $6,000 from where it is right now, a lot of people don't have that kind of capital to rebuy down lower, or they just will be at such a losing position. Like I said, with the economic environment the way it is, they may have to sell their Bitcoin for, money to pay for rent or pay for utilities or, car loans, or, they might be suffering due to not having a job, whatever their case might be. The global economy itself looks like it's going to be in a lot of trouble, at least for the next, 6 months or 12 months. So that means, in my opinion, I think Bitcoin is still going to be in a lot of trouble. People often think that, well, if the global economy suffers and the government keeps printing money, Bitcoin is going to go up. No, that's not the case. The only reason Bitcoin has succeeded so far is because it benefited off a 10-year bull run in the equity cycle all around the world. The last 10 years have been amazing for equity markets all around the world. Not just case for America. America has been really great, but Bitcoin has succeeded because the overall liquidity in the world was a risk-on environment, meaning that people were willing to take a chance on things like Bitcoin. But when you come to an environment where people are struggling for cash, where they need to raise capital, where they need to maybe sell their assets to be able to look out for themselves, to pay for food, to pay for rent, Bitcoin is the first asset that I can guarantee you that they will probably sell. Okay, especially if they see it start falling faster, right? Because remember, people are emotional creatures, right? When they start seeing accelerated drops like this in Bitcoin, they're gonna want to sell. That's how humans are. When they see big red candles and they start seeing, CNBC and Bloomberg start talking about, well, Bitcoin is down another 10% today, and it's down 15% for the whole week. For the month, it's down 30%. What are people going to want to do? They're going to want to sell their Bitcoin. And so this is why I believe that the capitulation in many ways is almost inevitable, right? But capitulation doesn't mean death. It just means that a new cycle is going to begin for the longer term, and we might have a big, base like this built for another, maybe 6 months or a year of reaccumulation, just like this base right here was built in 2015. And then we start our next journey for the next 2, 4, 5 years. All right, so that's where we are when it comes to the Bitcoin cycle. Again, I hope you guys enjoy this content. Thank you so much for watching. Hit the thumbs up, folks, if you really enjoyed our content. Come join the Discord server. The link is right below. I hope to see y'all soon. And again, take care. Don't be too bullish on things just because everyone on Twitter is, all about Bitcoin and thinking that it's going to go to 10 or 12,000. Think for yourselves. But yeah, until then, hit the thumbs up, join Alpha Trade's Discord. Link is below. And y'all take care. Have a good rest of your Monday. I'll talk to y'all soon. All right. Cheers.